It's okay. It's okay. It's okay. You want some more treats? There you go. Now, Toto, it's time for you to get down. We'll get in the basket. Okay. Good boy. Yes, good boy. Oh, my goodness. You know, people are mistaking the most visible price for the most complete truth. But, honestly, the screen price is a leveraged liquidity price. Physical gold and physical silver are monetary and industrial assets with a much deeper demand base. Traders changed lanes. The metal users did not. So I want you to know that this is not about pretending that contract price does not matter. It matters because it's the loudest voice in the room. But like the Wizard of Oz, the loudest voice is not always the real source of power. So to understand why gold and silver are falling on the screen or volatile on the screen, we have to pull back that curtain and look at the mechanism behind the price. Because behind the curtain are leverage contracts, liquidity flows, margin pressure, risk on rotation, and capital chasing the next speculative story. But frankly, once we pull back the curtain, we see something important. And I tell you this all the time. Those gold users, those 33 different global gold users, did not disappear, nor did the silver users. The debt did not disappear, and the currency problem did not disappear, regardless of what the spot markets say. So this is the question that I get all the time. Why are gold and silver falling? It was fun on the way up, not so fun on the way down. But everybody who owns gold or silver has been asking this question lately. I mean, you look at the screen, you see red, you see the spot price falling or rising, and something inside you say, oh God, did I get this wrong? Is the value disappearing? That, my friends, is the emotional trap, because most people have been trained to believe that the screen price is the truth, the whole truth, and nothing but the truth. But today, I want to show you, and the truth, and I want to help you slow that reaction down. Because after all, how many times can you be lied to when you do not know the truth? So before we let fear make the decision for us, we need to ask a better question. Are gold and silver falling because their purpose has disappeared? Or are we watching a temporary contract market move being mistaken for permanent truth? Because the contract price, it's the loudest price, no doubt about it. And it flashes on every screen. And they don't say spot gold contract or spot silver contract. They say gold, they say silver. And it moves every second. It gets quoted on financial television as gold and silver. And it becomes the number people emotionally react to. And like I said, it's fun when it's going up. It's not so fun when it's coming down, but that is a trade. And loud does not always mean complete. In The Wizard of Oz, the wizard's voice was loud. It shook the room. It demanded attention. But that's what we're going to talk about today. We are not pretending the contract price does not matter. It does because you care about it. But we are going to pull back that curtain and ask what is actually moving this price. Because there are two markets that people often mistake. The one market is tied to central banks, factories, mints, refineries, solar panels, electronics, defense system, jewelry, private savings, and long-term wealth protection. The other is tied to contracts and promises, and are all counterparty risk. And when people collapse these two markets into one, they become vulnerable to fear. So this is the heart of the presentation. One market trades in one place and the other trades in the other. So let's take a look at those. Because in the physical world, that market trades everywhere. So let's look at the contract market first, because this is where traders express options, hedge risk, chase momentum, use leverage, meet margin calls, and move in herds. It is not evil. Well, maybe it's a little evil, but it is not completely irrelevant. However, you really do need to see what's going. Toto. Oh, Toto's cousin. But this is where. So let's just take a look at it, because it's not the same as physical ownership. A contract can represent gold or silver exposure without requiring the trader to ever frankly touch gold or silver. And you know me, if you don't hold it, you don't own it. I like it in physical form. And that means that the contract price can be pushed around by forces that have very little to do with whether physical users still need the metal or not. This is the first part of the curtain. So let me show you the birth of it, because after the dollar was cut loose from gold, gold became more and more financialized. We've talked about it, turned it into a financial product. It moved from being the monetary anchor behind the system to becoming a trade, a screen price, a futures contract, a financial instrument. That changed how people experienced gold. What you're looking at here is when they established in the 70s the spot gold contract. And what did they say about that? The impact of U.S. ownership will be the formation of a sizable gold futures market, but rather small demand for physical holding of gold. So when we went into that debt-based system, they started to take the gold out of the system. It's still at the base. Central banks absolutely still buy it. But the price became the story. And this is where the wizard's voice got louder, to where people began forgetting to look behind the curtain. This might be, I don't know, one of the most important slides in the presentation, because in 1993, the great Sir Alan Greenspan, some of you are familiar with him, I hope everybody is, because he was the Fed chair for a very long time. And he was discussing market psychology and inflation expectations and the role of gold as a signal. And he talked about watching the bond market, the exchange markets, and gold as signs of what the market was feeling. Then he raised a question. What would happen if the Treasury sold some gold and the gold price broke? And his point was extraordinary. The gold price would no longer be only a thermometer of what's happening. It would affect the psychology itself. This is the Wizard of Oz moment. And frankly, Alan Greenspan was an amazing wizard. That loud voice on the screen is not just telling people what to think. It can shape how they feel. That's that perception management that we talk about all the time. Because once people have been trained to believe the screen price is the whole truth, then moving that screen price can move their confidence, their fear, their behavior. And that's why this distinction matters so much, and why I talk about it all the time. That contract price, well, that may be loud, it may be powerful, but it's not the entire market. Now, let's just step away from the thermometer and look at the patient, the physical market. because they understand that gold's price was not just a measurement, that it was a psychological signal. And that means that the screen price is not just reporting emotion. It can create that emotion. But in the physical market, well, that has to be mined, refined, transported, vaulted, fabricated, delivered, held. Oh my goodness, so inconvenient. Give me that inconvenience, I'll take it. But it exists in the real world, and the people who use it, well, they're not traders, at least not all traders. They're central banks and nations and manufacturers and energy systems and medical companies and technology companies and investors and families and savers and on and on and on. So the physical market is not just a chart, it's a global web of need. And that need does not disappear just because the loudest price on the screen temporarily falls. Now, we know we've talked about this. Silver is not just a precious metal. It is a fuse. It is an indicator. It carries energy and it conducts electricity, and it sits right inside the technologies people now call the future. Solar, electronics, medical uses, defense systems, batteries, contacts, circuits, industrial applications. And unlike gold, much of the silver used by industry is consumed, dispersed, or made uneconomically. It's just not economic to recover it. So when people look at a falling silver contract and say, silver must not matter anymore, they're missing the physical reality. And that's what I don't want you to miss. The screen is moving. The world is still plugged in. And silver demand, poof? No. Take a look at this. This slide matters because it shows that the physical silver story did not vanish. Demand is not only still there, but it's growing. And so are the deficits. They're still part of this discussion. Industrial use is still part of the discussion and the build out of all of this AI infrastructure. And investment demand, frankly, that's still part of the discussion too. So when the contract price falls, the question should not be, did silver stop mattering? The better question is, did the physical silver market disappear? What's the answer? No. Did the industrial users walk away? No. Did the world stop electrifying? No. Then maybe, just maybe, the price move is telling us more about traders than about silver itself. Now, I know that gold is the world's anchor, and it plays a different role. So where silver is the fuse, gold is the anchor. And it's not primarily about electricity or technology. Gold, it's more about trust. It's about reserves, wealth, settlement, sovereignty, insurance, memory. Gold has been trusted across cultures, across borders, across wars, across currencies, and across political systems. That's one reason, a big reason, why central banks not only still hold it, but are vastly accumulating it. And that's why families still save it. That's why I save it. People can run back to gold when they stop trusting promises. And we're close to that. I've been showing you how those confidence levels are falling. The contract price, well, that can move. But gold's role as an anchor is so much deeper than one trading cycle. So let's talk about the obvious question, because frankly, you know all the uses of gold and silver. And if gold is really losing its monetary purpose, like they want you to believe this time is different, Did central banks stop buying it? Nope. Central banks understand something that many retail investors forget. Gold is not someone else's liability. It is not a promise from a company or a bond from a government. And it's not just a digital entry. It's not a digital entry that depends on confidence in a system. Gold is held because when trust gets thin, gold stands firm. So when the screen tries to scare people out of gold, remember this, please. I'm getting chills. The largest monetary institutions in the world are not confused about what gold is. Take a look. They're not going away. They're buying more and more. So take a look at the debt. Is that going away? And is that even the whole picture? Do you think that debt is going to disappear? Because the answer is no, it isn't. Now, this is one of the most important points that I really want you to make, because fear makes people focus on the last price tick. But wisdom asks, what changed in the foundation? Did the debt burden go away? Did governments suddenly become disciplined? Did the system become less dependent on borrowing? Because you're looking at a screen with the M2 money supply. And the more of this garbage that they print or just push a button and creates, the less value that everything else out there has, until it has zero purchasing power value at all. So if the debt problem is still here, then the monetary reason for owning gold, frankly, it didn't disappear. The chart fell, big deal. But the reason did not. And look at this money printing. Did that stop? Clearly not. The number of currency units, because that's really what it is. It's not money, it's currency units in the system, has expanded massively. And, winners and losers are chosen. Do you think it's an accident, or that there's real value in the $1 trillion of Elon Musk's SpaceX and minting all of these brand new millionaires? Well, Wall Street has a printing press too. And right now that may not matter. But quite honestly, what does matter is gold and silver, because they are not just commodities, they're also measuring sticks. Everything used to be valued in terms of gold and silver. But once they took that out of the system, now everything's measured against a measuring stick, the dollar, that is going away and constantly changing. Because when more currency units are created, people can temporarily forget what that means, especially during speculative booms. Look at this. How many millionaires, trillionaires are being created? Look at all this wealth that's being created from nothing. But eventually, the question returns, what is the currency actually worth? This is why the screen price can be emotionally misleading. A temporary sell-off can make people feel poorer mentally, right? Oh my God, it dropped. Oh, that's awful. But the long-term currency story, well, that's telling you a very different truth. Did fiat money gain purchasing power during this time? Nope. This is where the story becomes personal, because this is not just about charts. It's about groceries, insurance, housing, medical bills, education, rent, and dare I say it, the cost of living. We feel this. The public feels this. They know their dollars do not stretch like they used to. So when somebody says gold and silver are falling because the contract price is down, I task you to ask a deeper question. Down compared to what? Compared to a currency gaining strain? Is it really the prices going up? Because that's how they pitch it to you. Oh, those prices are going up. It's really the currency going down. That is why it is so important that we see what's really behind the curtain. Because now, well, we come to a mechanism. Gold and silver rose sharply because money flowed into the trade. We talked about that. That does not mean that every buyer was thinking about physical demand like we saw when it was created, the spot markets were created. I mean, some were, clearly you and I were, but many, what were they doing? They were chasing momentum. Remember, straight up. And everybody's going, whoa, whoa, whoa. You can never count on Wall Street to give you true price discovery. That is behind the curtain. They saw the trade working in momentum, so traders piled in. They moved all that money, all that liquidity from the government, from the central bank money printing press. They moved it from one area to the other, and beginning of the year, they moved it toward the spot gold contract. That's how modern markets behave. When money flows into a lane, the price rises. When the lane gets crowded, it can do it very quickly, actually. But here's the part that people forget. The same kind of money that rushes in can also rush out. So can you see the pattern up and down? The wizard's voice can boom in both directions. Let me show you what I mean. And I really want you to pay attention to this pattern. And let's see if we can find this someplace else. This is the spot silver contract. Does that look like the same pattern? This is not unusual in financialized markets. Once traders see a pattern break, they do not always ask, well, what is the long-term physical demand for silver? Or even the shorter-term physical demand for silver. They ask, where's my stop? Where am I getting out? Where is the next trade? Where is the liquidity moving now? That is why people who own physical metal need to understand that they're really just looking at a trading mechanism. This is really, trading is how banks make most of their money these days, not in lending. And this chart, well, take a look at this. It does not prove that the silver chart does not prove that it's lost its usefulness. It's just a trade. Now let's look at the gold market. Same idea. Gold had powerful moves, then the contract market weakened. But again, ask the deeper question. Did gold stop being an anchor? Did central banks stop buying it, accumulating? No. Did debt disappear? Did the currency regain purchasing power? No. So the chart is giving us information, but not the whole truth. The mistake is not looking at the chart. The mistake is letting the chart erase everything else that you know. The same flow of funds that pushes the metals up can push them down just as violently. This is the curtain being pulled back. The same flow of funds. Can you see that? Is it obvious to you yet? Because that's the mechanism. And it's really not a grand mystery. Sometimes it's leverage or margin or traders taking profits, or it's capital rotating toward a hotter story. Sometimes it's fear or it's greed. But the important point is this. A violent move in the contract price does not automatically mean a violent change in physical reality. Because look, Everyone gets this headline. Rates, the dollar, risk on, risk off, ETF flows, profit taking, margin calls, tech momentum, and of course, the mega IPOs. The headlines change, but the mechanism is the same. Liquidity moves. That's what markets do. They create a reason after the flow has already started. And this is where investors get emotionally manipulated, not always because someone lies, but because the explanation arrives wrapped in authority. I mean, it's Wall Street. We're watching these. Somehow, the public believes Wall Street. I worked inside the belly of the beast. I know enough. I don't believe them. I dig deeper. But that voice is loud. The curtain shakes, and people forget to ask, what's behind it? Now, frankly, this might just be the most important slide because you've got to understand that gold users did not go away. Silver users did not go away. The traders simply changed lanes. That sentence separates fear from understanding. And that's really what I'm trying to give you today. Because again, how many times can you be lied to when you do not know the truth? The physical world did not vanish. The monetary problems did not vanish. Industrial use, that didn't vanish either. We certainly saw that the debt is still there. The loss of purchasing power is speeding up. What changed? How about the flow of speculative money? And you see, once you see that, then that emotional spell, boom, it begins to break. You stop asking, why is gold and silver over? Or why is it down? What is going on? Is this awful? But you start asking, where did the traders go? And what are they chasing now? And let me take advantage of the mess that they left behind, because you understand that this is really an opportunity. And you take advantage of it. Of course, we've got to talk about SpaceX. This is one place, just one, but there's more mega IPOs that are coming out because they become liquidity magnets. When a huge new story enters the market, we've seen it. I mean, that's Wall Street's job, is just to create these stories so that capital, well, they want access. Institutions want allocations. Traders, they want the next big thing. But that doesn't mean that the old asset lost its purpose or its real value, nor does it mean that that asset suddenly became that much more valuable, up or down. It doesn't matter. It means that the market's attention has moved. And frankly, this is really how bubbles form. Money chases the new story, but the road everyone is chasing is not always the road that protects them, because greed chases bubbles. Fear keeps people away from what will protect them. This is how wealth gets transferred. Those guys at the top, they know absolutely everything that I'm sitting here and telling you today. They know the truth. And they manipulate you to believing a lie. People buy excitement late. Then they sell protection early. They chase what feels good and they abandon what feels uncomfortable. But protection really, I mean, honestly, it rarely fails exciting when you need to buy it. Because what is it really? But it's insurance. And insurance feels boring until the storm comes. Gold and silver can feel frustrating. I know. You guys, I've been accumulating since 2002. And everybody, once you do something, boom, you want instant pudding. But this is not instant pudding. And that does not mean just because the spot prices dropped that their purpose has disappeared. Actually, it means the opposite. And it also means, or at least it may mean, that people are being tested emotionally, perception management. And we've seen this before. When? Well, 2008 and the great financial crisis. In moments of liquidation, the most liquid prices, well, they can fall first because, again, margin calls and all those reasons that we talked about. So people sell what they can sell. Just to meet that margin call, they need to raise cash for this next big trade. And then the people that don't understand what's going on panic. But in physical markets, it shows up in terms of premiums, in coins, long-term monetary demand. Quite honestly, that behaves very, very differently from the screen. And that's one of the reasons why 2008 is a great example, because you can see that as spot gold and spot silver miners fell, the physical only market, the collectible market, that's the physical only market, that made this trend high. So sometimes the market screams one thing in the moment, but history, that's really what tells you the truth. The wizard's voice can shake the room, but it does not change what's happening. It does not change what gold and silver are and have been for thousands of years. So please, this is the message I want to leave you with. Do not confuse temporary contract liquidation with permanent monetary truth. A contract price can fall and a chart can scare you. You know, the headlines, that's all about pressuring you. A new bubble can distract the crowd, especially where we are in this trend cycle and all of the gambling. This is just a big casino. It's not investing on Wall Street. It is gambling. So I ask you to ask yourself, did the users disappear? Did the debt disappear? Did money printing stop? Did fiat regain its purchasing power? Did gold stop being an anchor? Did silver stop being the fuse? So today we pulled back the curtain. I hope that you saw that the price flashing on the screen is not the entire gold and silver story. It's the loudest price, the contract price. It can be pushed up easily or down easily by leverage, liquidity, headlines, fear, and greed. The deeper reason for owning physical metals, gold and silver, sound money, they've not disappeared. This is about your freedom. This is about your future. Just keep in mind, debt did not disappear. The loss of purchasing power didn't. The need for real assets, more important than ever. Industrial demand, well, that's going to fluctuate with the economy too. But the monetary role of gold is critically important. That's why you and I both own it. What changed was the flow of funds. Traders changed lanes. And that's why this moment is so important. The goal is not to react emotionally to the wizard's voice on the screen. The goal is to understand what is really and truly happening behind that curtain. And then make a calm, informed decision about your own wealth that puts your best interest first. That's what this show is all about. That's what Zang International is all about, education. So before you allow fear to push you away from protection or greed to pull you toward the next bubble, take the time and call us. Build your sound money strategy that first takes into account your goals. What are you trying to accomplish? Because quite honestly, there's gold and then there's gold, and there's silver and then there's silver. So you can click that QR. Can we have the QR code, please? Click that QR code on the screen and book an appointment with your sound money strategist. And let us help you look at your personal situation, your goals, your risks, and the truth so that you can create a sound money foundation with clarity and not panic. Because quite honestly, temporary contract liquidation, counterparty risk should never, ever, ever be confused with permanent 1,000-year histories of monetary truth. And I do not think that this time is different. Do you? And so I'm going to move Toto here. Thank you, Toto. You're so good. Here's a treat. And I will take questions. And the first one is from Sari's client. And Sari's client heard that effective 1/1/27, purchases over $600 will be reported. Is that true? Well, I'm going to have to double check on that. It might be true. It might not be. And it could also be dependent upon the state. So we will come back to that next week. Will you make sure and grab that for me, please? Okay. This is also from Sari's client. The question, and it's a question about Social Security. During a reset, let's say a 50% decrease, would that decrease my payment from Social Security by 50%? My mortgage is a fixed payment. You have said that the reset of mortgages on averages, well, okay, that's not what I said, but we'll address it one at a time. But you have said that the reset of mortgages on average is 9 months. If my payment is decreased by 50%, how do the banks expect me to pay my mortgage? If I can't pay, what happens next? My strategist, Sari, and I have been brainstorming this. I would like your take on it. You're very welcome. And we're just going to take it, let's break it down into little bite-sized pieces. So Social Security during a reset, let's say they say a 50% decrease, would that decrease my payment from Social Security by 50%? Probably not. What it actually does is it decreases your purchasing power. So it makes everything look like it's 50% more if that happened to be what that number is. And we're not going to know that actually until they do it. Yep, your mortgage is a fixed payment. So it's not, okay, let me go back because I want to explain that better. Okay. This is my $10 trillion Zimbabwe note, right? It doesn't matter how many zeros there are. It matters what you can convert it into. So they don't want your pushback. If they reduced your income, and I actually have up in a PowerPoint to do shortly is the report, 2026 report from the Social Security Office. I haven't gotten to it yet, but I have it up in a PowerPoint. So I'll be going into this much more very, very soon. But it's in what you can convert it into. That's what matters. I can't even buy an egg, not even one egg, with this 10 trillion Zimbabwe dollars. So you are right. Your mortgage is a fixed payment. So you will have, if you get the same Social Security, which I would imagine, I can't guarantee anything, but I would imagine that if we make it that far for the upcoming cuts, I don't think I'm going to be able to do it for next week, but I'll do it for the week after because it's an important one. So your mortgage is a fixed payment. And so you'll be able to meet those mortgages, except then typically what the government will do, because interest rates will be rising at that same time, is there probably is in that very thick mortgage document where they can modify interest rates and they can modify things at will, meaning the banks can modify the contracts. Right. And remember, banks also have safe harbor, which means they can do anything and there's nothing you can do. So during that period of time, then it is more typical that your interest rate on that mortgage, I know it's fixed rate, they can't do it right away. There's that block of time. That's why we want to get rid of that mortgage debt within that average 9-month window. You can't hold me to how long the spot price will stay up there after they do that overnight reset, because I don't know and it's beyond my control. I can tell you that historically it's been a 9-month average, but in the exit strategy, because this is part of the exit strategy, in this exit strategy, by the time we get there, it's not going to be a random call. All of the planning and the positioning and the liquidation will have to be planned. So I'm telling you, if you're working with us, you need to be in very close contact. And we'll let you know when we get to the point where you really need to pay attention a lot more, because we're starting to set up for executing the next part of the strategy. But the goal is to repay that mortgage before they start having the ability to change those interest rates. We're going to do our best to make all of that happen, because we are, after all, only human and there's only so much control that we have. But I want you to understand that you will be informed. If you are with Zang International, everybody here knows it. We are all coordinated. We are all working together, and we have a lot of that infrastructure set up, because our job on the way out is to capture as many of those gains as possible. And there are different ways that we might be able to do that, at least historically. So I'm going to recap at the end of this, because there's so much. If you can't pay, they're going to want you to keep paying. The banks don't really want the real estate back. But all right, let me recap this, because there's a lot in there. So Social Security, more than likely, they will not reduce your Social Security payments when we're in the hyperinflationary stage, because you would give a whole lot more pushback. But it's not the number that you have. It's not how big that deposit is into your account. It's what you can convert it into. And this is where community comes in really, really, really important, because you have to create surety in food, water, energy, security, barterability, which you guys know for me is primarily silver, but not completely. Wealth preservation, which you know for me is primarily gold, but not completely. Community, arguably the most important thing I ever talk about anymore, and shelter. These are the things that we all need to lead a reasonable standard of living. And then at the same time, what you're talking about is actually executing a strategy so that when we do those overnight resets and they take something like this that really has no intrinsic value, it costs nothing to create, and they revalue it against gold that is all intrinsic value, that takes labor and energy and then stores it. And that's when we see the price of gold in terms of whatever that local currency is. So wherever you are in the world, that's when you'll begin to see gold express to its true fundamental value. Then we take that fundamental value, and what might take you 10 ounces of gold to pay off that mortgage today might take you a tenth of an ounce or a quarter of an ounce or something much, much less than that. Because I want you to also remember that for most of the time that the planet has been here, and certainly most of the time that we've used gold and silver as sound money, going back to what, 635 BC or something like that, that this never changes, right? This never changes. It's a commodity. What changes? The amount of this stuff that it takes to buy this. This protects you. This protects you. This leaves you vulnerable. Okie doke. Let's go to the next question. Oh, can we get somebody else's in there a little bit? Okay, and we can come back to that other one. Just usually like to get other questions in there too. And Wolf 728 asks, Lynette, is it conceivable that the use of physical gold and silver could be illegal if we go to CBDC? Well, you know what you're really talking about, Wolf, is the form of the metal. Because at the base of the gold jewelry or the sterling silver flatware, at the base of that is the monetary metal. So I will agree with you that, I mean, right now, okay, so let's look at this in two different ways. Number one, there's a really strong movements in the States to legalize gold and silver as money again. And we have to do that push. And since we're talking about it, to learn how to do that push along with me while I'm learning how to do it, and we have to do our homework, by the way. But the second Tuesday, the second Monday of every month at 6 p.m. Eastern Standard Time, we have the Sound Money Hour, so we learn how to do that. So there's two different ways that we can answer it. Let's just say for a moment that we can get a lot of momentum in the sound money movement, and enough states adopt it to put pressure on the federal government. And we're talking about here in the US at the moment. And so there's enough pressure. Well, then, I mean, Kevin Warsh has come out and said that there will not be any CBDCs. But then again, President Trump legalized stable coins. So you have to understand that when I'm looking at this digital ecosystem, the difference between a CBDC would be under the control of the Federal Reserve versus a stable coin that would be under the control of a corporation or a government, whoever issued that stable coin. So it could be Amazon, it could be China, it could be whoever issued it. Both of those, either way, they're at that permission level at the top. So if they don't like what you say or do, they take permission away. If you don't have real money outside of that, and they take your permission away, and you do not have surety in food, water, energy security, barterability, wealth preservation, community, and shelter, if you don't have that together, then what are you going to do? Now they have you by the cojones, and frankly, they are in full control. Is that okay with you? Because owning physical gold and silver and also depends on how you own it. Because what do we say? We say there's gold and then there's gold. And I still haven't quite gotten myself I have to bring my slabbed coin. I'm going to the vault. Okay. Anyway, you have to understand that it was illegal to use this. And I was born in 1954 when you could only have 5 ounces of gold. It was illegal to have more than that in any other way other than the pre-33s and the slab. Well, the coins weren't slabbed then, the pre-33s. And my Uncle Al was sitting on at least 3,000 ounces of physical gold in this way, a pre-33 raw coin, when it was illegal to hold more than 5. And that really is one of the biggest reasons. That is the big, huge key reason why I do not buy new bullion. Because if that happens, then the only place that I can use it is in the black market. And I'm not going to get full value from it there. And it might be a little more dangerous. Give me the kind of gold that I can use in the normal marketplace because I'm executing a strategy. And I want to be able to convert that gold at its fundamental value into other income producing assets that right now are severely overvalued, but they will become undervalued as this whole thing unravels. So if you're concerned about that, which I think personally you should be, there is extraordinarily clear historic precedents, particularly here in the US. I mean, do you realize that 1971, I was alive when Nixon close the gold window. Oh, that sounds so nice. Oh, it's breezy. Let's just close that window. Please, are you kidding me? First, the public lost access to monetary gold. Then the public lost access, or well, didn't lose access, but silver was removed from our system. And then Nixon confiscated gold from the rest of the governments because they had sent over their gold to us for safekeeping with the promise that whenever they wanted it, they could send in their dollars and we would send them back the gold. And after 1971, we did not do that anymore. And I haven't seen anywhere, I'm telling you, I have to keep things more general if I'm talking to a more general audience. But if I had a promise, this would be like, okay, here, you hold my gold for me, okay? And give me dollars, that's my claim check. It's a claim, right? Well, if I can't send in my dollars and pull out my gold, then that's a confiscation. They took, the US took and kept my gold. I don't want them to happen to you or me. So if I do a collectible, it's what if I'm right and what if I'm wrong? Because personally, I don't go above fundamental value. There's no reason or need to go about the true fundamental value of an ounce of gold. And because of that truth, and you will have this soon. You will have this soon. If anybody knows how to create more hours in a day and more days in a week and clone me, let me know. But this is why, personally, I only do the collectible gold, because I'm buying it so far below the fundamental value that nothing else really matters. And it puts me in a position where, should the government choose to do an overt confiscation, because they've been doing the covert, an overt confiscation, I have the kind of gold that is in a different category. It's collectible. This has nothing to do with monetary gold. It's a collectible. This is my collection versus monetary gold. Taking that, boom, gone. So, I mean, that's how I feel about it. It's because of the way I was raised and the experiences that I've had. And so, yeah, it is definitely conceivable that the government can, and the central bank, along with the central bankers, I should say, can make monetary gold illegal again. But collectible gold, it's a different category. And Nathan Patel, 1786, asks, I want to buy gold and store it at a Brinks storage location. You can do that. They told me that there is insurance through the Lloyd's of London. However, I don't know how to obtain the COI. Advice? Yes, give us a call. We'll figure that out for you, because I'm sure that we know that that's not an area that I personally work in, but I'll bet you Emerald knows all about that. In fact, I'd almost I'd almost bet an ounce of gold against it, but I'm not going to, but I almost would. So give us a call, Nathan, and we will help you. We'll walk you right through that. And Kaya Osger from Instagram says, what will be the minimum gold to silver ratio the upcoming 5 years? Well, Kaya, I got to tell you, I don't really care. And the reason why I don't really care, I mean, it can go up and it can go down, and I can show that to you all day long, and that's not really a big deal. And we could, here's the question that I think you might really be asking me. Are we going to get to a 20 to 1 ratio? And so therefore, is silver so much more undervalued than gold is? Now, if that's the way you're thinking about it, then what I know from that expression is you're thinking about gold and silver as a trade. And there are times that might be applicable, although honestly, in the physical market, you should never think about gold and silver as a trade. Having said that, what happens with that gold and silver ratio as we go through hyperinflation? Okay, it gets extreme like it is or has been actually. Then it'll grow more narrow until the public is fully aware that we are in hyperinflation. And then it grows wider again as gold resets the local currency. So you can do it that way. That's called ratio trading. But there are a couple problems with that. That's not a choice that I have personally made. And the reason is because I'm not a trader. I am a long-term strategist. And I don't want to be locked out of what I need or what I'm going to need tomorrow because I think because of that trade. Does that make sense? And if it doesn't, by the way, if I explain something and it doesn't make sense, would you please let Jessica know, and she'll put it up, and I'll try and explain it a little bit different. And the upcoming 5 years, that what I just told you, I think is exactly what's going to happen. I don't know how more narrow that ratio will be, but and I can't give you guarantees other than I'll show up and do the work. But I think we will definitely, I would believe that hyperinflation will be quite apparent to the general public within those 5 years. So that's what'll happen. It'll grow more narrow and then it'll grow wider. And just call us, then execute the strategy. Define what you're really trying to accomplish, not that trading piece, but what am I trying to do? I want to sustain my standard of living. I want to protect the fiat money wealth, the intangible wealth that I've accumulated. I want to leave a legacy. What do you want to do? What are you trying to accomplish? And then we can help you decide what makes the most sense. And I can tell you, absolutely, there are things that I have in my portfolio that I bought back in 2002 and 2005, and et cetera, that I can't get my hands on now. It's gone because it's physical. So once it's gone, it's gone. And that's why, until it comes back on the market again. But that's why I say, get your strategy in place. Then if you want to do some speculation, do, but get that foundation. Because that's really your wealth insurance. More than that, that's your freedom insurance. That's what gold really is, and silver too. It's your freedom insurance. If you don't do this, and we're on a digital system, you're gonna have to jump, or you're gonna have to find somebody else that did do this. And Jeremiah D2I2X. Do you think it's smart for somebody to put all their wealth into gold and silver? Well, it depends. Okay. Now that's not all my wealth, because I've created surety in food, water, energy, security, that barterability, which for me is this stuff, and wealth preservation, which is definitely the gold for me, among other things. I spent a lot of time talking and figuring out, and just wait, guys, I have something in the works you're going to love. You ask me about it all the time. We just recorded a little intro this morning, so have a little patience, but we're one step closer. And shelter. These are the things that you want to make sure that you secure. And so personally, and you also have to understand, I'm an ex-stockbroker. I'm an ex-banker. I actually really understand that language. I have cash because that's still our tool of barter. But I don't own any overvalued stocks. I don't own any cryptocurrencies because I know that that's the Trojan horse, and I just can't buy into the lie and not sit here and be ethical with you and say, oh, don't do that, or this is the lie that they're driving us to. No, I'm not going there. So I think it depends. I think that everybody must do whatever it is that they are comfortable doing, regardless of what anybody else says. I am very comfortable having the lion's share of I'm very comfortable having the lion's share of my wealth in hard, tangible assets and sound money. And the rest of that, you got to understand, I think different about money than anybody else I ever talked to, because this stuff, and I know this is my bill, but I've ripped up real ones too. I think that might be illegal. I never would do such a thing as that. Oh, but quite honestly, that's what I think about it, whether it's a real fake bill or not, because all that is supposed to mimic this sound money. And this, remember, if you haven't gotten your dime card, call us. We'll send you your dime card. If you're a client, you get the first one for free. And any more that you want to pass out to your friends and neighbors and family and whoever else you're trying to educate, you're the Army. You get them at our cost, because we've got to get the word out. And Dr. Gloopy Glop says, hi, Lynette. I was talking to some stacker friends who claimed that Zang International has very high premiums, something like 28% when either buying or selling back to Zang. Is that true? And thank you. Well, it depends, right? That's why the whole strategy, everything depends. So there is one product that, yep, on the way in, it's a bigger premium. That's also why you don't even go near the fundamental value, unless, of course, what you want to accomplish takes you into that legendary area. But we don't really ever recommend that, because that's not what this strategy is about. However, having said that, you are welcome. If it's all about pricing, then, and you're talking to somebody, you can make a comparison. This is bullion. It ain't 28% on that. This is silver. No. So it just depends. But we reveal everything. So before you even make a commitment, on the way in, on the way out, it depends. We have the full basket of availability because we have a diversified wholesalers. So it just depends. And Ralph Ramsey asked, recommended methods to prepare for stablecoin impact January 2027. I am holding junk, fractional gold. Other methods? Those are great. Those are great methods. The impact of the stablecoins is going to start slowly. I don't know if I showed you this or not, but when they first start a system, what they'll do is they'll get the infrastructure set up. And we can see that is definitely happening. It doesn't matter if we're in a crypto winter or whatever. They're building all of the guardrails for this new system. And they'll create a whole bunch of them. They won't release them yet. They're going to try and determine how to release them and manage the inflation and all the problems and headaches that this is going to position and start to unfold. But keep in mind, they want us to use the stable coins. They want us to feel comfortable with it. That's why when you take my physical representation of Bitcoin, This is why they do this, right? Make it look like it's an ounce of gold. It's not an ounce of gold, but they want you to think about it like it's gold. So, no, I think you're doing fine as long as the junk silver and the fractional gold is about sustaining your current standard of living. That's where that fits. If you want growth and you want other protection and you want, an exit strategy to pay off a mortgage or convert into income producing assets, this is really a long-term strategy. If you're with us, then we expect that you'll want to be with us forever. So whatever the fees are, we're going to earn it, because that's the difference. You're going to pay whatever, wherever you go. We're going to earn it. But you're okay with that. I'm just not sure that covers a full strategy, but you're fine with that. That is much better than many other things that you can do. Just don't expect. I do believe that the stable coins will be the one to usher in the visible hyperinflation, but don't expect it all at once, because they're not going to want you to be able to relate what's happening, the bad things that are happening, to their policy. So they like distance and how it's brought out to you and how you see it. And Wello2520 asks, should I sell my 1,000 ounces of silver? Now, if that's a 1,000-ounce bar, it's kind of hard to work with that. So you might not want to sell it, but you might want to convert it. If that's just 1,000 ounces of physical silver, no, you don't want to sell it. And depending upon what your standard of living is, you might even want to add more to it. And I'm going to say silver is fabulous. I love it. I own it. But you also have to have some gold, because this is the secondary monetary metal. It's the fuse. This is the primary monetary metal. It's the anchor. You got to have both. And you can go back maybe after this one to the one that I skipped, because I don't want to skip any either. Thank you. Okay. And Connie Pizza 2837 asks, hey, Lynette, I've been trying to understand the difference between inflation and currency debasement, but can't seem to grasp it. Are they the same thing? Yes, they are. So you have grasped it. I always think it's interesting, because the difference between the two is actually the government central bankers want you to believe that there is actually a difference between the two. So it's not the value of this garbage going down, it's the price of this stuff going up. No, it's not. It's the value, the purchasing power value of the money going down. So yes, they are the same thing. It just shifts the perspective a little bit. So now what you're doing is you're going, oh, look at those merchants are raising the prices. Oh, this inflation, it's awful, it's awful. Guess what? Inflation is not a monetary phenomenon. It is a fiat money phenomenon. It's really the currency debasement. Thank you very much for that question, but you do grasp it. You grasp it perfectly. Okay, and from Sari's client, thank you, Lynette, for all you do. You're very welcome. I find this detail interesting. If there is an overt confiscation of bullion, why can big banks, not central banks, keep their bullion, but I would have to turn mine in for worthless fiat or worse yet, digital currency? Because the banks are private corporations, and they're actually the ones that took over the system back in 1913, right? I'm pretty sure I did this because I was so in love with what Kelly did to show that expansion of it. I don't know if it's out or not, but mark it down and let's go over this maybe briefly next week. on Tuesday. Oh, no, we're not going to be able to. Oh, yeah, you guys, I'm going to give you a big heads up. Do you know who's going to be here with me live answering questions next Tuesday? The one, the only, I just have so much incredible respect for this man, G. Edward Griffith, who wrote The Creature from Jekyll Island and broke this whole myth down. Love it. He's going to be here next Tuesday, live. At any rate, okay. Wait, did I do it? I don't think I did it. We're okay. Keep their bullion, but I have to. Okay. The reason why big banks can do it is because their job is to transmit economic policy to all of us. So they don't really want you to equate what's happening to the central bank. They put on the big banks, and then the big banks, the commercial banks, they have safe harbor, which all of these tech companies that are creating all of this stuff, they all have safe harbor. And again, what does safe harbor actually mean? It means that they can do anything they want. They can destroy the entire economy. They can create the next financial crisis, and nothing happens to them. Thank you. And John Mercado 365 from TikTok asks, The Wizard of Oz tells the whole story. Follow the yellow brick road, gold bars. And do you know that in the original story, Dorothy's slippers were silver? They weren't ruby red, but ruby red looks better, especially with Technicolor. But that's why I wore my ruby red glasses. Yeah, it really does. And Dora E.R., would annuity rollover into investing in private equity insurance be a bad strategy? Yes, it would be a horrible. Will you make sure that we put the link that I did on private equity and insurance in there? Don't do it. Are you kidding me? Yeah, Dora. All you're getting are claims and promises and counterparty risk. Only gold, physical gold in your possession, according to the Bank for International Settlements, which is the biggest bank in the universe. It's the central banker's central bank. They say only gold is a financial asset that runs zero counterparty risk. Everything else are a contract. So any contract is only as good as the person on the other side of that contract. So even thinking about that annuity question, look at those annuity policies and you will see all over them, based on the claims paying ability of the insurance company. Private equity has gone in there. They have taken that over. They have gone out and bought garbage, turned them into financial products, and sold them to the annuities. Is that really what you want? Is that what's going to secure their garbage and their debt is going to secure your future? Are you kidding? Bad idea. Bad idea. Don't do it. But you do whatever you want. You do whatever you're comfortable with, but there's this bridge in Brooklyn. I don't really own it, but I could sell it to you. No, not really. Okay. And Kaya Osger from Instagram asks, when should sell physical gold and silver? What would be the indicator for selling? Okay, now that's a great question. And that's why we're looking at this really long-term strategy. It goes to everything, right? Whatever you're going to do, the strategy is really like this complete whole, because there are going to be different times when you're going to want to liquidate. So for example, if we're looking at you sustaining your current standard of living, what is that? That is a combination of cash, maybe even some digital gold on tied to a MasterCard that is redeemable. Otherwise, don't touch it. So like a glint or a kinesis, and maybe some gold backs if you're so inclined. And then you have fractional, so different sizes of gold and different sizes of silver. That is the first part of your strategy, and it's designed to be used as that first wave hits. But what if something happens before that and all of a sudden you need money? Part of the strategy, if you call our strategy specialist, you're going to know how this process works. So go ahead and do it and you'll see. But they're going to look at how you're saving. I have my savings in gold. If I need cash today, my raw gold, that it's just a raw ounce of gold, that's what I would liquidate if I went through whatever cash I have set aside. But I'm running a business. I have to do that because I have to make sure I can always pay salaries and all of that. So in that case, that would even be before the strategy kicks fully into gear. Again, so that's one thing. Then we go into sustaining your standard of living. Then the next piece, and it's a different kind of gold that would protect the fiat money wealth that you've already accumulated or that you choose to keep in the markets, which is fine, or that you can't take out of the markets. So it just kind of depends. Now that gold, you're not going to be rushing to liquidate because that's your insurance for the wealth you've accumulated. But then you have the kind of gold that you're going to convert and get rid of your mortgage. So you see, it kind of depends. That's why what you want to do is you want to call us. You want to have that strategy session. You're going to establish your goals, and then you're going to see, oh, this is what history shows best supports this function. This supports this function. This supports this function. You might have to liquidate your emergency gold first. I hope you don't, but if you get into circumstance, I can tell you for an absolute fact, it's saved my butt sometimes, right? That's emergency gold. If you don't ever have to touch it, that's okay. You can never have too much gold or silver. Then you go into your sustaining your standard of living. You're going to be liquidating that gold as you go along, and that's silver, actually, as you go along, dependent upon whether you need to pay your property taxes, or I hope this isn't true, but you need medical expense. So it just it depends, and you're going to be liquidating at different times depending upon your needs and as you're executing the strategy. It's not just, oh, we're buying it and here we're selling it, because it's not a trade. It's a strategy. It's an insurance policy. It's a savings account, and it's your wealth holder. And Sahid, the Mentat of Dune from Instagram, do you think the Japanese carry trade is about to unwind? Yes, I do. I think everybody's carry trade is unwinding. What's a carry trade? Because there may be people here not familiar with that, right? That's where you go to this country and you borrow money at this interest rate. And then you go over here to this country that is paying a higher interest rate. And so you take your borrowed money and you buy that. And then you make the difference in your trading income between the yield that you get here and the yield that you have to pay here. That's a carry trade. So when Sahid is asking me about the carry trade, part of that is probably because of what's happening with interest rates. But because of where we are in this trend cycle, which is at the end of this currency's life cycle, all of these moves are really outsized, right? The volatility and the price movement and everything is just erratic. And that really is an indication of the end of a currency's life cycle, because it's all moving, like I showed you, based on that flow of funds, right? They've printed so much. They've done it forever, right? But particularly since 2008, all of that money that they create remains in the system. It just goes from one place to another place, right? because it's all about the banks making money and the corporations and their profits, but it's all in terms of fiat. 10 trillion times zero is zero. So yes, I do think that the yen carry trade is unwinding. I think it's been very, very unstable, but I think even the US dollar carry trade, that was in place for a while. Any of the carry trades out there, we're at the end of this currency's life cycle. You will see them lose control, them being central bankers, you will see them lose control of interest rates. I mean, come on, you guys. And at Jeff account, hello, Lynette. No one should worry about metals volatility. If you are worried, you are in it for the wrong reason. Thanks. You said it better than I did. Thank you very much, Jeff. And Ernest DeBella, okay, I'm not even looking at this yet. Rock and roll hoochie coo. Okay. Oh, there you go. Oh, you like that Doom. I think that Doom Loop series was really good, but I bet you I could do it better now. I just keep trying to get better and better and better. So rock and roll Doom Loop hoochie coo. When are we going to plan your live event in Texas? I'm in a great location between Austin and San Antonio with lots of wineries. Oh my goodness. I don't know when I'm going to be in Texas. Jessica, maybe we can see what we can find in Texas as we're planning for next year. I will, however, in July, be in Orlando. Can you come and visit me there, Ern? Oh, well, actually, that is the Rick Rule Symposium. And I think that the only thing that's left now are the virtual tickets. He is completely sold out of the in-person tickets. So sorry about that. But I'm going to tell you right now, have you noticed, especially on my lives, is my work getting a little better? And do you like it? And I actually wanted to ask you, I had to do this because I had to clear up the fallacies, but do you like it when I do a structured piece in the beginning and then we go to questions, or would you prefer me just to dive right into questions? If you could let Jessica know, or maybe I know we can set up a survey, but we can get Tom to do that.
Yeah.
We'll set up a survey on that because I really want to give you, what it is that you're looking for. But I'm not really sure, Ernest, but you're really not that far from Phoenix. And I think tomorrow we have an appointment to check out where we can do the live. So once we know that, we've got things rocking and rolling, maybe you can come and visit us here, but I'm not opposed to going to Texas either. And Colleen Allen, 3382. I think the book you held up is authored by G. Edward Griffin. Exactly, it sure is. I'm signed up for the red pill and look forward to seeing you. Yay, Colleen. You make sure, because I want to personally, even if you have one already, I personally want to give you a dime card. So definitely come and see me. I can't even tell you. And he's going to be here next week. So if you can think of some questions for him, the man he is sharp as a tack. I'm sure you guys know it. I'm like fan geeking out over it. Honestly, I am. I just have so much respect and admiration for this man. I can't even tell you. So I'll be there. That's Vegas. And I do think that we can still, you're going to be there, but I think there's still tickets available for that one. I believe there is, because I'm just going from one and I'm not even coming home first, going to the next one, and then I'll be back. But I will not miss the live. I'll be there. And Greg Lowe, if I butcher anybody's name, please forgive me. I do have a question. For someone with less than $100,000 to invest, how would you recommend we enter the market? I'm looking to study some traders and copy their strategy rather than investing myself and losing money emotionally. What's your take on this approach? Look, I had every license in the world because I was with Shearson, and Shearson required you to have all of your licenses. And so, I had my options license. And, you're starting out as something new. You're kind of a hot dog. It's kind of fun. You're seeing everybody around you, blah, 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 blah. And when I get technical, which I didn't really do a technical thing today, but when I get technical, that's what you're looking for. You're looking for momentum. And all you have to do is take whatever I tell you long term and shorten it up. But quite honestly, Greg Lillo, I mean, it's okay. You do whatever you're comfortable with, regardless of what anybody says. But I hope you're not doing that with a lion's share of $100,000. You want to make sure that you call us, build your sound money strategy foundation first. Then you want to take risk, rock and roll hoochie coo, even rock and roll doom loop hoochie coo. Because honestly, these markets are cracking. They are broken. They are just being supported by that. And that, the confidence of that is going away. So if you want to trade, make sure that you have a foundation built. We can help you determine if you want to put 100,000 into these markets and play with it and see what somebody else can do for you. Okay, because I want to make sure that you're in a position, what if I'm right and what if I'm wrong? If that $100,000 goes away, then this is going to make you whole. So the first thing that you do is you establish your sound money base. Call us and we'll tell you, we'll help you understand, we'll help you make sure that you get everything protected so that no matter what happens, you are made whole. But that person is not going to care as much as you do. So if you really, really, really want to trade, do it yourself. Learn the technicals. It's not rocket science. It's actually pretty simple. And, my friend Greg Manarino, who is the Robin Hood of Wall Street, he talks about trading all of the time. So you might want to check out, if you really want to trade, you might want to check out what he's talking about these days, because at least he's got a foot in both camps. And Daryl Effing's, Lynn, should I take a withdrawal? My mom always used to call me Lynn. She's not alive anymore, but should I take a withdrawal from my 401k and just get more gold and silver? If you can, you do whatever you're comfortable with, because you're paying yourself back anyway, and you're paying it back in fiat, but now you have sound money. So I think that's a fabulous idea. And Queen Fin Sav, I want a dime card. Okay, Queen Fin Sav, call us and we will very happily send you a dime card. That's what we want to do. We didn't create them to keep it for ourselves. Nothing I like better than handing these things out. And Sam Ed ZJZ, so is the SpaceX IPO is the final cash out before they crash this whole thing and use the ensuing crisis to transition us over to blockchain? Yeah, but I don't think it's just the SpaceX IPO. We still now have that hyperinflation phase to go in, and we are in melt up. I know I've been saying this for a little while because it's not obvious to most people, but that's really what these mega IPOs are about. And that's going to have an impact on any of the other intangible markets, because those IPOs act like a magnet for liquidity. And since this really has become a big casino and trading market, it's a flow of funds sloshing here to there. So, SpaceX sucked a lot of air into the room. And now, because rules were changed, you've got all of these indexes, these ETFs and mutual funds that have to buy SpaceX. It's now, let's see, what did they say this morning? I could be off on this because obviously I don't have this number in front of me, but I do believe that SpaceX, at least as of this morning, was trading at something like 200 times forward. That means what happens in the future. Sales. No earnings. Let's not even muddy the water with value. What is that? Because they're going to be building stuff on the moon or out in space, building those data centers. And, let's face it, he's got lots of money to work with now. Elon Musk. Yep. In fact, he just bought another AI company this morning. I can't remember the name of it off the top of my head, but they've got lots of money to expand their monopoly, and Elon Musk does not have anybody overseeing him, or there's no controls on what he does. But surely it must be worth 200 times forward sales. Big question mark. But think about this, and we'll see what happens when the next mega IPO comes out. What's going to happen to SpaceX? Is all the money that's flowing in there, especially as this lockup period, meaning that insiders can sell more and more of the stock, is that money going to slosh over here? And let us not forget these mergers. SpaceX has all this money. They just did a merger. They just bought that company, like I said. So we have a ways to go. It isn't like I think that this melt up is over tomorrow. We got a hockey stick. But yes, this is laying up that final and ultimate cash out. That's why it's so critical to get this strategy in place right now. And when you're talking about trading, why would you buy into that? How hard did you work for that money? Why would it be okay for them to transfer it? Because this is how the wealth transfer works. If you buy SpaceX at $100 and it goes to $1, whoever got that $100 from you, Elon, that your wealth transferred their way. And what's that skip? If bonds are crashing, why wouldn't I buy them now? Because bonds are a debt instrument. And when you say bonds are crashing, let's clarify that, okay? So this is for those that aren't aware of how bonds work. These are interest rates. This is the principal value of the bond. This is when the bond is issued. So it comes out when issued with a stated coupon rate, right? If interest rates go up, we had 40 years of this. If interest rates go up, the market price of the bond goes down. The principal, if you hold it to maturity, that stays the same. That's why banks can tell you that they're in good shape, because they say, now we're going to hold these bonds to maturity. Maybe. We'll see. Anyway, interest rates go up. The market value of the bond goes down. Interest rates go down. The market value of the bond goes up. The longer the maturity, the bigger that movement. So the shorter the maturity, like 3 months, 6 months, something like that, you don't get as big a movement with the interest rate shift. So that's how bonds work. So, okay, I'm not saying that bonds are actually crashing. It depends on the bond, right? Because bonds are about credit quality or the ability to roll that off. Because what are bonds? Debt, right? So if bonds are debt, why would you buy them now if you think that the company might default? I mean, there are bonds that have recently gone to zero because the company's not paying them. So why wouldn't you buy them now? Number one, they're denominated in this. This is what they're denominated in, and this is losing purchasing power by design. So I don't want a debt instrument that's losing value by design. It's inside the system and requires permission. That's why you would not want to buy the bonds. The problem is too much debt. You cannot solve a too much debt issue with even more debt, but they're trying to, or they're at least papering over the problem with it. But you get to do whatever you want. It's your wealth, and you're the one that's going to either reap the rewards or suffer the consequences. But are you really into trading? Do you still put value in this stuff, even in the face of all of this inflation / devaluation? Ralph Ramsey asks, when is Lynette coming to the International Stacker and Crustacean Nation? Where is it? And when is that? If you let us know, Ralph, I'd be part of what we're doing in the future proofing, and you're going to see some more stuff. And we've got some changes that we're making. So bear with us, because we're trying to figure this out. But if I had my druthers, honestly, then I would probably be doing a live event every single month, because that's my favorite. That's why Tuesdays are my favorite, because I get to spend them live with you and ask me questions. But if I have you standing here face to face, that's what I like even better. So I don't know. I don't even know when that is. I haven't heard of it, but we will check it out. And maybe they'll have me. I don't know. And Barbarosso Sapska, sorry, 7762. How do we measure the value of gold when the spot price is more about what's happening in the paper markets? Am I correct in this? Yes, you are. Thank you so much. Thank you so much. I'm constantly trying to figure out how to explain this better so that you can make educated choices. So what you can do, number one, you can see it more in the physical only market, in the collectibles market, but you can also see it, like I've shown you, in physical availability in those bullion banks, or in the COMEX exchange, in the LBMA. So you can watch what's really happening there. You can also see the level of premium, like we see in the East. So in China at the Shanghai Gold Exchange. You can also see it in what central bankers are doing. Really, you got to ask yourself, who knows more about what's happening to this than the central bankers, whose job is to regulate the rate and speed of the devaluation? And they're clearly losing control, because you're noticing the inflation. If they weren't losing control, it'd be at that 2%, and you'd still be going, yeah, no. I remember a number of years ago, I took my daughters, before they had babies even, and we went to Hungary, and we went to, I've said this before, but in this trip we did Hungary, Austria, and the Czech Republic. And I was so busy that I just wasn't even thinking about it. And I ordered in the forint, which is the Hungarian currency, as well as the euros, as well as the different currency at the Czech Republic, because I just was not thinking, well, yeah, I could have used the euro everywhere I went. I didn't need to get 3 different forms of cash, but I did, or currency, but I did. And I'm glad I did, because when it came in, the Czech currency was maybe about that thick. And I got 3,000 in the Czech currency, 3,000 in the euro, which was even more. If the Czech currency was like that, then the euro was like that. And euro was like that. But in the forint, in the Hungarian currency, it was like this. The stack of bills, and I only got I think 2,000 or 2,500 there. It could choke a horse. And so my immediate reaction when I saw that was, woo, Hungary is experiencing a lot of inflation. Now we go. And I always get a guide if I can't speak the language, because I have questions that I like to ask and kind of see what's going on with people and how much they understand. And one of the questions that I always ask is, so how's the inflation? How do you find the pricing structure and the price moves and things getting more expensive or not? And how's that going for you? Interestingly enough, I have not yet, all the different countries that I've gone to, knowing full well what's happening with their inflation numbers before I go there, I have never actually spoken to that said, oh, yeah, this inflation is really bad. They go, oh, it's not too bad. Not too bad. So, it's that question is so fabulous, but that's how you can do it. And maybe we can put a little list together. You can put a little list together of those things that I just said. And there could be more. So it doesn't have to be, it's not going to be a conclusive list. And maybe we can just kind of maintain that somewhere on our website to help people see the truth, if it really matters, because the other part of that is the debt profile, right? And when you look at all of the debt that's being grown and the deficits, what are deficits? Deficit is spending money that you do not have. So that's like you going out with a credit card and, and your income doesn't keep pace with how quickly you're growing the debt on that credit card. Well, as long as that credit card lets you keep putting more stuff on it, you can keep shopping and hide what's really happening. But at the end of the day, when you have debt, you have to service it, you have to pay it off, you have to roll it over, or you're going to default on it. Take your pick. You're going to have to do one of those things. As long as you can do that, things can be hidden. But if you look at on the Federal Reserve, the purchasing power chart, and you look at the debt levels, that's really where you know what's truly happening, not the spot markets. So I can guarantee you this, even though I think I did a fairly good job on this, I'm back at the drawing board. Just like saying, I'm so glad, Ernest, that you love the doom loops, but I feel like my work has even gotten better than that. And I bet you anything I can do it better than I did it before. It is so critically important for me that you understand what I'm saying. And you don't even have to agree with me, but I want you to have the truth so that you cannot be lied to. And Dora ER asks, Lynette, you confirm my uncertainty with annuity, private equity, insurance stuff. I sure hope so. And watch that video. That is just a massive accident waiting to happen. And they all have safe harbor. Hey, those are investments. They can go down. Who knew? You're very welcome, Dora. I am here to be of service. And Auntie Kami says, hi, Lynette. I've got enough precious metals to cover a third of my mortgage. Is it wise to keep stacking or sell to reduce mortgage? You don't want to do either one of them, because right now, if you've got enough, I'm going to make some assumptions here. And so don't tie me to the numbers, but I want to make an example. So if you called us and we calculated out, this is how much gold you need today to pay off that mortgage, and you have a third of it covered, number one, it makes sense to make sure that it's all covered. If you did not call us and you're basing the amount of gold to pay off your mortgage on in current spot price and current mortgage terms, well, then you probably can diversify your gold portfolio a bit more. So the first thing I'm going to recommend that you do is that you call us here. And if you have a strategy specialist, have that conversation. If you don't, click that link. Can you put the QR code up, please? Click that link and set up a time. So, and then have that deep discussion, because what might take you 10 ounces to pay off today might only take you a 1/10 of an ounce by the time we get that. Because what we do not know is how much debt will be grown between now and then, but it'll be a lot. And we also do not know what that cover ratio is going to be. So while I can sit here and I can do a comparison between the current debt levels that they admit to and the current amount of physical gold that's out there and do a calculation from that, we don't know the whole story. And so that really is a very, in my opinion, a very conservative guesstimate, because we don't know all the bets based on those debts. And if this explodes, if the debt, or not if, the debt bomb, 2022, when they started raising rates, they popped that debt bubble. Yep, they just keep pumping it up and up and up, but there are so many holes in that debt bubble, it's ridiculous. So they just keep putting more debt into it to make it look like it didn't go away. It's gone. It's gone. They already popped that debt bubble. The only thing that's left is when they keep pumping it up and it just doesn't work anymore. Do not liquidate your gold. Buy more. Do not liquidate your silver. Buy more. But call us first, because there's gold and then there's gold and there's silver and then there's silver. And how much do you need to sustain your standard of living, protect what you've accumulated, pay off that fixed rate debt, and take advantage of opportunities? And dare I even say it, leave a legacy for your family that they can't outlive. Because if you and I don't do this, what have we got? What kind of world are we leaving our children? I'm not willing to do that. I really, 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 really love my children. I want to leave them better off than they would be without me, because I understand sound money. But let us not forget, in order to make that big of an impact, what do we have to do? We have to get sound money back in the system again, because if we do not do that, you have no power. It is time for the public to take their power back. And I'd love to say that there's all different ways. I'd love to say, nah, this time is different. Even though I've been studying currencies and currency life cycles since 1987, none of that matters anymore. Yeah, it matters. It matters deeply. It must be flippin' redeemable. In other words, if you don't like what you see the government or central bank doing, you can send in this garbage and take out this sound money. That, my friends, is voting with our wallets. That is how we control the 1%. It should never be again the tail wagging the dog. We're the dog, we're the public. We need to be wagging the tail, the governments, the central bankers. And how do we do that? I don't care how many times you protest. I don't care how many times you vote. Voting is important. Getting with that local legislator is important. I don't care the party. I just care about sound money. But the reality is, the only tool that really works, look at what the industrialists and the tech guys are doing. They're flooding the politicians with money. They're buying what they want. We got to do the same thing. We can't flood them with money because we're not in that printing press position. But we can hold them accountable with gold. because gold requires fiscal responsibility and puts limitations around what they can do. This, my friends, is how we take our power back. And the dime cards, that's how we get the word out. Because I realized I talk about sound money. What is it? What is sound money? People don't know that. It is money that is above all governments and central bankers' ability to inflate away. And why? Why can't they inflate it away? Because gold is used, that I could count, not a definitive list, in 33 different places in the global economy. And silver is used in 36 different places in the global economy. Where's this stuff used? One. Oh, digital currencies. How many places are that used? Once. And by the way, this is just a trading vehicle. Will those stable coins be any better? Will CBDCs be any better? No. They will all be used to lull you into a false sense of security. You want security? Physical metals in your possession, booty, hooty, Rudy, Manooty. I don't care. You know, people will ask me about taxes and this and that. Here's the reality. 100% of everything is worse than, like in Australia, 53% of something. Think about that. And Jambobsky asks, do the elites know that the system is in trouble? And are they trying to save it, even though it will inevitably end? Yes, the elites absolutely 100% know that the system is in trouble. 100% they know that. So what they're trying to do is get that last bit of wealth transfer in now while they can. That's the mega IPOs. That's the, all the new debt issuances. That's all of this garbage. And mergers and acquisitions. You watch, that's all speeding up. And that is about consolidation and wealth transfer. And by the way, if you go in and you look, this is the place to know that. I've shown it to you before. I'll show it to you again. But in the ultra rarities, where these are, one coin could go for many, 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 many millions of dollars. So 1 ounce of gold at, say, $15 million, right? That's the category that I want to be in. I'm not spending 15 million bucks on a coin, but anybody that can is either likely to be the person that writes the rules, or like we're seeing with all of this new legislation putting in the guardrails for the tech companies, those that can influence those that write the rules. That's why I only do the collectibles. You do whatever you're comfortable with. But if you don't hold gold and you don't hold silver and all you hold is this stuff, what happens when it goes to zero? You can have 10 trillion of it, and it doesn't mean anything. Elon Musk, the first trillionaire. Is that really an indication of value? Or is that really an indication of how far down the value of this was? I've got to do a piece and pull that Gabriel over the White House and that soundbite so that you could hear that back in 1933, they did not even have a name for billions. 1,000 million, you owe us 1,000 million. But then, of course, we were still, even though there was a level of loss of purchasing power between 1913 and 1933, we're still on the gold standard. There were still restrictions. So, yeah. And Barbara Barbara DiMassio, the Federal Reserve or the Treasury. That's what happens. And so I do think, in the past, this has been true. So I think this is probably going to be true in the future. I don't know for sure. We'll find out. But the banks will be tasked with getting as much other gold out of the system as possible. And so if you want to pay a mortgage or you want to, I'm not saying that the banks will absolutely convert it, but I think that's a high probability. You still want to call us first. And this is a good opportunity to say that, because I know that all of our strategy specialists tell all of our clients, if and when you need to liquidate, you have it in your possession. You can do anything you want with it. But before you make that choice to liquidate where you're going to do it, just please do us a favor and call us first. Goes back to that earlier question. Call us first, get a price on what we will pay, right? Then you have some hard facts and you can go anywhere you want. But do not just automatically decide to do that if you need to liquidate something, please, because chances are pretty darn good you will not get the full value out of it. So I need to say that to you. Just call us first. You don't have to do whatever you want. Just call us first. We're all about educated choices. And Piotr Wojdelko, 1150. Why prominent people are saying that gold standard is not feasible. Oh, I love this question. I'm trying to understand the Fed and their point of view. Oh, yes, indeed. What they need is flexible money. No, they don't want to go on a gold standard because that creates restrictions and it ensures that you and I, the public, have the power. But if the Federal Reserve can print all of this money and not even print it, just push a button and create all of this money at will and then give it to whoever they like the best, because you and I don't get it first. It's those corporations around it. So no, they don't want restrictions on how much new fiat money they can create, because who wants restrictions? I mean, if you remember, what did they say? Kid in a candy store, right? You'd eat yourself sick. If you had no restrictions and you're a child and you go into a candy store and there's nobody watching you, you can eat as much candy as you want. You're going to end up with a bellyache. And this, my friends, are central bankers' bellyache. So the Fed's point of view, their job is really about controlling the rate and speed of the inflation so that you do not lose confidence in this Ponzi scheme system and you hold your wealth in there and you look at it and you think that it's going up. I mean, my first house I bought in 78 and we paid $59,000 for it, for an 1,800 square foot house, 3 bedrooms, 2 bathrooms, a decent little starter house on a quarter of an acre of land. That same house today, $500,000. Is it worth $500,000? Well, it's not that. It's because this is worth that much less. And going back to the interest rates, and I am having, Kelly is working on this. This is one of the things that I want to show you. But it was a 40-year trend of lower and lower interest rates. See how those interest rates are going down? And as they lowered the interest rates, this is true for all debt, then the price of the house could go up, and the normal person could meet that mortgage payment. So part of the problem now is that interest rates are so much higher. I mean, when I bought my house, my interest rate was 12.75%. So yeah, a $59,000 house. And, you also have to keep in mind where incomes were. I'm pretty sure that in 1978, well, I know this is true before I married him because he told me, but my ex-husband, who was an electrical engineer, he was making $58,000 a year, which is nothing today. But back then, I'm going to tell you, it was a decent living. It was a very decent living. So understand that the manipulation of the interest rates and what the Federal Reserve wants is they want to hide the truth from you. It's not the value of your house going up. It's the loss of value in the dollar. And they regulate that speed with the frickin' interest rates. It's brilliant. It's evil. It's genius. But if you don't know it, it has all the power in the world. Once you do know it, just like understanding the spot markets are not real, they're contract markets. And the users of gold and silver didn't evaporate. This stuff, and I'm pretty sure this is the piece. Yep. I bought this in a whole box of junk silver. So I bought it at like, I don't know, spot or less. Did this evaporate because nobody wanted it or realized that it's monetary at its base? No, but I was happy to buy it. I'm telling you right now, because I do understand its true fundamental value in terms of that garbage. So, and again, if you, wait a minute, can I see that question one more time? Would you guys like me to do a whole piece on why prominent people are saying that the gold standard is not feasible? I think I should do that. And you know, I like to say this because when I kind of put my toes to the fire and it sort of forces me. But I think that would probably be a pretty good PowerPoint. And if you feel that way and question that, what that really means is there's lots of other people that have that same question. I think that'll be a good piece. Okay. And J1 Hughes 924. Did we overprint money and have depressions before 1913? That's a great question. And we did there. Most of this money printing has happened since 1913. You might have heard about the tulip bubble or the French Revolution and things like that. So whenever a government, typically they go off the gold standard to fund a war or what have you. And once they're on a system where they're printing the currency, they can print as much of it as they want, go into a bubble, the bubble pops, then you go into a depression. So that's when governments would take us off the gold standard. In this country, we went off the gold standard, the War of 1812, and then again in the Civil War. What happened in those cases, right? You don't see, I actually even have one in here, but you don't see Confederate money around anymore. So that's pretty typical. But if you're off the gold standard, but when you are on the gold standard or a bimetal standard, so gold and silver, what you have are ebbs and flows, not booms and busts, because it works like this. I go out there and I work really hard and I'm very industrious and I create this widget. Now I'm poor, so I have to like be creative and try and create something that you who have money might want. So you notice my widget and you go, oh my gosh, this is the best thing that I've ever seen. And so you and your country, you buy a whole bunch of these and now your money goes from you to me. And I get richer as you get a bit poorer. That forces you into that level to be creative. And now, so that's the booms and busts. Or not the booms and busts. That's the ebbs and flows. That is the way a gold standard economy works. When you do something and you bring value to the table, then you end up with abundance and having lots of the money flow your way when you are when you're the creator. And then that enables you to go out and buy from another place, another entity, another country, right? So on a gold or silver standard, you have ebbs and flows. On a fiat money standard, where central planners pick the winners and losers, like whoever is closest to the central bank gets the money first. That's not even necessarily the government. Those are private corporations. And by the way, when we were in ZIRP, zero interest rate policy, the corporations around the central banks paid less than the federal government for the debt that they borrowed, that they created from the central bank. And the states, for their debt, pay even more. Go figure that. Private corporations least, federal government more, states even more than that. I mean, can we like flip this whole thing around, do you think, and go back to a constitutional situation where the individual was the most important entity and then the state's job was to support the rights of the individual, and then the federal government's job was to support the states whose job was to support the rights of the individual? Let's go back to that. So when we were on a gold standard, no, we could not overprint money. That's the point. That's why the Federal Reserve wanted to go off of it, and all countries did. And keep in mind, prior to 1913, I know I did this, but Jessica, do you think, and maybe do you think it would be possible to pull up that one? You know which one I'm talking about, right? The kickoff chart. Because that's, you know which one it's in, and just to make life easy. I actually have that in the piece that I put together for the Red Pill event. But I don't know. It might be like, you know what? We didn't do that as a standalone yet, did we?
I don't believe we did.
I don't believe we did. I'll tell you what, because I'm not going to do that maybe to put out, but I would do it to give to the strategy specialists, because we don't really have time or be prepared for that. But that would be one to put on our list. We're trying to figure out how to make this whole thing much better for you too. So we've got some things that are in the works. But no, prior to 1913, gold created restrictions around what they could do. When they went off of it, it was a 20th of an ounce of gold, like teeny, 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 tiny, that backed $1. It was a $1 20th of an ounce of gold coin, a $1 bill, and a $1 silver dollar. In 1913, when they legalized the Federal Reserve, that same 20th of an ounce of gold that previously backed $1, see those restrictions, now backed $2.40. So they could print almost 2.5, and they did, almost 2.5 times the amount of money that they had been able to print with the same amount of gold. So that's why when you look at maybe you can pull up the purchasing power chart, because you can easily see it on that. That's one of the reasons why that's my favorite chart. Okay, awesome. Okay. Jessica, you're doing a great job, by the way, but now you have to bring it down. Okay, so you see that huge drop off right in the beginning? That's when they printed all of that new money. But what I'm going to show you in this other chart is they created a whole bunch of more debt from Federal Reserve notes from corporate debt, but they didn't release it into the public yet, because if they had, then the inflation, the public would have lost all confidence in what they were doing. That was the kickoff. You can see in 1930, so right, the stock market crashed in 29. There's your roaring 20s. Jessica's moving it around, okay? See how there's that huge gain? It looks like in purchasing power during the Great Depression. Really? Did any of you read how fabulous it was for everybody because the value of the dollar got that much stronger? No, it didn't really. That was a function of the market and the deflation, which destroys a bunch of that currency, right? But it didn't go back to the original dollar's worth of purchasing power. It was like somewhere in the middle. So think about this, because we've talked about this before. It was horrible when they lost all of that purchasing power in a very short period of time, 1913 to 1920. And they printed all of that money. Well, then there was so much money in the system, and suddenly the general public had access to credit. What? I can buy something and I don't have the money, have to have the money for it? This was the kickoff. But because there was so much new money set up into the system, happy days are here again. So you gained a little bit of purchasing power, but then there was so much of it out there that the middle class, it felt to them like they were really benefiting from it. And then they wanted to emulate the wealthy, much as what we're seeing in the markets today. And so when the wealthy has transferred over enough of the risk to the public from themselves, read mega IPOs, mega mergers, and acquisitions, then the system could crash. But people didn't realize, they thought they had gained something because they gained a little bit of purchasing power. During the Depression, who really benefited from that? It was not the general public. But I know you guys have probably heard of the story of Seabiscuit, a racehorse. And what was that purse during the Depression? $1 million. The reason why I am bringing that up is because people go, well, when my gold goes to $3 trillion an ounce, who will buy it? Here's the reality. There are always people with wealth, because wealth does not disappear. It merely shifts location. And do not confuse wealth with currency. I have recently realized that I need to do a piece on that. I've already even set this up, because you are put in a position where you need currency, right? I mean, you got to pay your bills, but the real wealth comes in the security, in the community, in what is gold really supposed to do? It's supposed to hold your labor over time. That is the most important function. Does anybody really expect this to hold its value over time? Because I'm pretty sure you would say no. No, it's going to be inflated, right? Just don't lose sight of it. I'll keep working on explaining this better. And seriously, you do need to know that I want to know when I've been confusing or when I have not explained it, because that is my mission, to give you the tools to make educated choices that actually put your best interest first. And you got to understand this stuff or you can't do it. Then you just believe the lies. And twig 231. How do we expand the money supply and give loans without paper or crypto? If there is finite gold and silver, what happens when you have none? There is a finite amount of gold and silver. You know what? This really sounds, because this keeps coming up, which probably this inspired these questions, which is awesome. So I got to do a piece on it. Okay. It definitely won't be next week, because I have J. Edward Griffin next week. I mean, please, that's going to be amazing. But
I grabbed it.
You grabbed it.
Yeah.
All right. We'll do a piece on that because you can't devalue the currency. You can to a certain level. I'll do this for you. I think it's going to be easier if I just show you, and it'll be easier for me too. And you know, I just made this commitment, so I'll figure out how to show it to you. And Barbara DiMasio, 4623. I did better that time. If gold gets confiscated, what about the bank bullion? In 33, you turned it into the banks. Then what did they do with it? They turned it into the Federal Reserve and the Treasury. And so that's what would happen. That's what would happen. But remember, the banks are corporations. They're not individuals. And you could still, depending upon what you did, like if you were a dentist or a jeweler or things like that, you could still keep your business, but it was overseen. That's the other advantage of the collectible coins, because that was the only way that you could continue to accumulate gold, but it wasn't overseen. You just had it privately. Do you think Treasury Secretary Wooden knew that? And Prepper Patty asks, Lynette, are you still developing investment jewelry? If so, how and when and how can we participate in that? Well, maybe before this Christmas. I don't know. There've been like so many other things that have kind of, we are, but I can't say that that's like tippy top, but maybe by this Christmas, I think we should have our first line. I think we can do that. At Miss Nobody. That's probably my least favorite call name, because you're not nobody. Okay. Can you make a video showing how a reset will play out? For instance, many people, especially boomers like me and you, will protect a portion of their equity during a reset automatically via home ownership. Nope. However, what happens next? If their home is worth $1 billion US hyperinflated dollars, dollars now get converted into stable coins. Then what? The economy will be sluggish and they may need to liquidate. Will people need to tap into their equity with mortgages to survive? And that will fuel the new stablecoin economy. Pull that down. There's a lot of misconceptions in there. And I feel like I want to do a video on, yes, I will. You know, there are a lot of misconceptions in there. So I'll speak a little bit to it if I can see more of it, so we don't have to worry about it, but we'll protect a portion. Okay. You will not be able to protect any of the equity that you have in the stock market with your house. I have done videos on what happens to real estate during that period of time. But just keep in mind, if the value of that was inflated in terms of dollars because of the manipulation of the interest rates, what goes up must go down. And the historic norm is for 1 ounce of gold on average, and you can see this in the video with hard data. And remember too, I give you links to all this stuff. Go do your own research. Don't take my word for it. But the value, a 1 ounce gold coin on average, I actually think it's higher than this, but could buy 25 buildings. 25. So you will not be able to protect your wealth with your real estate because that real estate has been inflated extraordinarily by the issuance of fiat money. So, yeah, home ownership won't do it because all your costs are going up. And let's just say for a minute that that's how you generate your income. You have a whole bunch of rental property. Do you remember in 2020 when things got really bad and people didn't have to pay their rent? Whoever owned it, they still had to pay insurance. I mean, that was going up. The cost of maintaining it everything else was going up for the owner, but the renters, either they have the rent freeze, which, I mean, what do you have out there now? Yeah. Socialists, Mondami. Oh, we've got to have rent control. How about money control? Rent control does nothing, because if it costs more to maintain that property than what they can generate, why do it, right? So do not mistake the current fiat money price or value of your house with real wealth and what actually happens during a reset. That's why part of the strategy, I mean, real estate, aside from those other risks that we just talked about, property taxes, because how do communities and states how do governments generate income? Taxes and fees. So those property taxes go up like crazy. Even if your mortgage is paid off, this happened during the Depression. If you did not have the money to pay your property taxes, you lost your property. So not only does the sound money strategy address the different issues, even if you do have rental property, even if they do eliminate people having to pay that, or they put a cap on it, we've got that covered in the strategy. But I just don't want you to think, oh, well, the value of the house will go up. It goes up. No, it's just the opposite. All of that fiat money inflation gets burned out of it. That's also when it goes to an undervalued level. Because in hard, tangible assets, things always go. Thank you, Uncle Al. Undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. If it's something that's real, like gold or even real estate, right? That's not going to evaporate regardless of what happens to that price. Then you have this constant movement. I would say spot gold is probably somewhere over here in the I know it's in the way undervalued level, but real estate is over here in the way overvalued level because central banks have targeted it simply because it is such a huge part of the GDP, the global economy. Here in the US, it's about 30%. Then think about it. You buy a house, now you're going to fix it up. So you're going to go to big box stores and you might buy some furniture and you see what I'm saying? It's not just one thing, but it has this great impact. And so they want people to continue to spend because it's a consumer-driven economy. It's not rocket science. But on the other side of that, all of the inflation goes out of it, and then they will overshoot. And at some point in here, we will see income-producing real estate severely undervalued. So now you'll have gold somewhere near its fair value, fundamental value, and you'll have income-producing real estate, as example, way below value. Now you flip-flop. And that's how you take advantage of the wealth transfer. Wealth never disappears. It just shifts location. Typically, it shifts to the 1%. I don't know. What a concept. How about if it starts shifting our way? So I will do something on it because your question lets me know that I have not been clear yet. And I appreciate it. I don't get insulted or upset about it. This is my job and I work for you. I mean, that's the way I feel about it. That's why even when I'm traveling, I do my lives because that's how important they are to me. And I will, just so you know it too, I will do it when I'm at Rick Rule, that event. I will be doing it. And Roadhouse 777, is the stock market up or are assets just being priced in a weakening dollar? Thank you, Roundhouse. Yup. That's really what the whole game is. And people see it going up and they go, oh, that's great. Oh, that's great. But it isn't. It's the value of the currency going down. Yeah. Thank you. Thank you. Yes. But I still have to get better and better at it. And James Gibson, 3124. Lynette, I was wondering if I should start a 403B for the match of 5%, or should I just invest it in metals instead? You know, I would honestly, you do whatever you're comfortable with, regardless of what I say. But I would say that the biggest challenge and the biggest problem that I have with 403Bs is once you get in, it's like the Hotel California. You ain't getting out. You know, matches are nice, but if you put in that 5%, and let's say that you buy SpaceX, and let's say that, because there's a lot of debate going on right now, how much this company is worth, right? So let's say that loses all of it, then you've lost your 5%. At one time and for a long time, I had a SEP IRA. But once we got to a certain point in the currency's technical phase, I was no longer comfortable with that position. And so, you know, then I went to all collectibles, getting ready, getting prepared for what I know is happening. So I personally, I have a great retirement, but I do not have it in their system. I do not have it in a permissioned system. Because if they can say, I mean, it's just your perception. Have any of you gone out there, let's say your bank account, right? You're just going along hunky-dory, and then all of a sudden, you know, you have all of this money in your bank account, but you go to cash a check or something like that, and it's like, nope, can't have it. But wait a minute, I have all of this money. But the government sent in a paper and said, you owe, so we froze your account. Well, you might work it out and all of that, but in the meantime, can you see what I mean by a permissioned account? Anything inside of the system, in order to access it, they have to grant you permission. And if they have to grant you permission, that also means they can say, you don't have my permission to access this anymore. You got to think about that. That's why having everything in there, and you got stocks and you got bonds, you got ETFs, you got mutual funds, you got annuities. I'm so diversified. No, you're not. It's all intangible. And if they take that permission away, you lose all access. And there's nothing you can do. That's why it's so important to have physical gold and physical silver in your possession. And as far as executing the strategy, what you really need right near you is whatever you might need when the system says no. That's why I'm telling you to get cash out. Yeah, it's going to zero. Who cares? It's still what's going to be recognized first. There's a certain level of cash before you even go into your barterable gold and your barterable silver. Call us. We'll help you understand it. And seriously, you know, we love questions. So you do whatever you want, but, and I think we have time for one more question, maybe two. And Piotr would go 1150. What advantages would be if the gold standard had been introduced? Wow. The advantage would be that you would go to work, you would earn a paycheck, and you would also have the ability to, whenever you go to spend it, to actually save money and not have to take risk in order to prepare for your retirement or for anything else that you might want to do. You, on a gold standard, you and I, the public, is in charge. So instead of being abused by politicians and central bankers, they know Whether you do it or not is irrelevant. The ability to pull that gold out of the system and tie their hands so they can't give our freedom away and take our freedom away, that's what it is. That's the advantage. What gold and silver in your possession do is they protect your freedom. What a digital system will do, if that's all we have to work with, you will lose your freedom if you do not have that whole community set up to create that surety. Because you got to eat, you got to drink water. What would happen if they said no and you had no place to get that food and water? You're going to die. And I hate this, but it's just a fact, and you need to know what the facts are. As we go through the transitions that we are already in, on average, 80% of the population goes into abject poverty. Abject poverty. I don't want anybody to do that. I mean, it kills me that these guys think that they have the right to do that to you and me. We have an obligation as humans on this planet to create and go into community. And I've spoken to enough other people that have said, well, if those people don't get it, too bad for them. No, you guys, there's strength in numbers. We've been sold down the river. We've been sold a bill of goods. We've got to open our eyes, and there's strength in numbers. So, okay, maybe not everybody gets it yet. We don't need everybody to get it. We need 3% of the global population to get it. It's more than 1%. 3% of the global population. But when those that we would love for them to understand this now, but they don't, you can't let them out there punishing them, because guess what? They have talents and gifts that they can bring into your local community to create even more strength in that community. Everybody has something they can offer. Everybody. Oh, I guess that's it for today.
Lynette, we have a few reminders for our viewers.
Oh, I have some reminders.
Well.
Oh, okay. Rick Rule Symposium. I'm so excited. I mean, really, I love the work that I'm doing. And I love him. Boca Raton, July 6th through the 10th. Be there or be square. There are still virtual tickets available, but it is a packed house. And the Red Pill Expo in Las Vegas, July 11th through the 12th. So I'm going to have a very busy July, but be here and tell all your friends. Tell all your friends. G. Edward Griffin, who wrote and understands the Federal Reserve probably better than anybody else in the universe, will be here, and you get to ask him questions. So whatever comes to your mind, write it down and bring it. Next Tuesday at noon, Arizona time. And let's come together, and I don't know, how about we all just make a positive difference for a whole lot of people? And no matter where you are in this world, please. Oops. Oh no, she's going up there. Okay. Never mind. I'll come back to that close. Okay. We are also conducting an experiment. I don't know that I knew about this. Did I know about this?
You totally know about this. You're very excited about it too.
Oh, okay. Apparently I know about it. I don't read it before it comes up there. So, okay, we're conducting an experiment beginning Thursday and until Monday. Zang International will be, oh yes, and I am very excited about this. We will be streaming around the clock, 24 hours streaming. Markets don't sleep. Money change doesn't happen on a schedule, and neither will this conversation. Drop in anytime, stay as long as you like. You can come in for a minute, you can come in for 3 hours. 24 hours a day. And yes, I did know about that. And yes, I am very excited. It's not going to be me alive sitting in this chair for the next 24 hours. But, we've got to get the word out. And whatever we have to do in order to do that, we are all of us here committed to it. So again, wherever you are in the world, let's make this a better place. Bye-bye.